Hello and welcome dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is May 25 and we're starting from euro-dollar pair with Jakub Novak as usual. First, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0783 happened when the MACD line had risen significantly above zero, limiting the upward potential of the pair. As expected, data from the IFO regarding the business climate, present situation, and economic expectations for Germany triggered a decline in euro-dollar. Then, pressure intensified as news emerged that there is still a deadlock in the negotiations over the US debt limit. Reports on GDP and the leading consumer climate for Germany are due today, when could help euro recover provided that the figures exceed expectations. But speeches from ECB members Luis de Guindos and Joachim Nagel are also coming, so there is a chance for a further decline in the pair. It's better to look for opportunities to open short positions in the market. For long positions, buy euro when the level of 1.0752 is reached, and then take profit at the price of 1.0790. Growth will be seen after very good data from Germany. However, before buying, traders should make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0731, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.0752 and 1.0790. For short positions, sell euro when the level of 1.0731 is reached, and then take profit at the price of 1.0695. Pressure is likely to persist due to the lack of progress in debt limit negotiations. However, when selling, traders should make sure that the MACD line is below zero, or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0752, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0731 and 1.0695. The next stage of our review is the next major, Evangelos Poulakis with GBP USD pair focused. Currently, the pair is tested the support levels of 1.2344 and 1.2361, upper boundary of the daily cloud. A rebound and recovery of positions could bring the pound back into the zone of breaking consolidation, with the center of attraction around the weekly Schirm trend 1.2448. Breaking through, the encountered levels will pass the baton to the supports located below 1.2302 monthly medium-term trend, 1.2240 weekly medium-term trend, and 1.2173 lower boundary of the daily cloud. Currently, the bearish trend continues to develop. The intraday bearish reference points today are the support of the classic pivot points at 1.2322, 1.2284, and 1.2211. The key levels on the lower timeframes are currently forming resistance in case of a full-blow correction, situated around 1.2395 and 1.2413. Consolidation above these levels could shift the current balance of power, opening the way to bullish reference points at 1.2433, 1.2506, and 1.2544, resistance of the classic pivot points. Gold, sweet gold. We've got a trading plan for this commodity asset, presented by Dimitris Tsoupas. Early in the European session, gold is trading around 1957.91, within a symmetrical triangle pattern, and below the 21 SMA and 200 EMA. Yesterday in the American session, the instrument reached the high of 1987.86, the area of strong resistance and level that coincided with the top of the downward trend channel, and the 200 EMA. Gold could make a strong bearish acceleration only if it breaks below 1950. Then the price could reach the area of 1944, the level last seen on March 24, and if the bearish pressure prevails, the price could even reach 7-8 Murray level located at 1937. Below 1949, there is a strong probability of the technical rebound from this level to 1937.78 Murray, because the Eagle indicator is in an oversold zone. Hence, the bulls could take advantage and gold could reach the 90-70 zone. Again, the 21 SMA. On the other hand, in the event that gold continues to bounce from the current levels, consolidates above the 21 SMA 1970, and breaks sharply through the downward channel, this could be a sign of the trend reversal. If this scenario occurs, gold could reach the 200 EMA zone, located at 1988. And finally, it could reach the psychological level of 2000 USD. Our trading plan for the next few hours is to buy gold above 1955 because it's located within this symmetrical triangle pattern and it's expected to bounce and reach the 90-70 area. In case gold falls below the symmetrical triangle pattern, we should wait for it to reach the support zone between 1944 and 1937 in order to buy, because a strong technical rebound could occur in this area. And finally, here's Laurie Bailey with USD JPY pair forecast. Let's have a look. On the weekly chart, the price has surpassed the resistance of the embedded price channel line, the balance indicator, red line, and the MACD indicator line, blue. The price is on track for long-term growth. The nearest resistance and target is the closest line of the ascending Harper channel at 142.25. On the daily chart, the price has stayed above the price channel line 138.57 and has reached the first local target level at 139.40. The main risk of correction lies in the price divergence with the Marlin oscillator and the price movement. However, the question persists whether it will fully form. If the price reaches the next target at 139.40 and 140.35, the low of September 22, 2022, the divergence will not be confirmed, and the price will continue to rise. On the 4-hour chart, the price is rising above the balance line, red line on graphic, and the blue indicator line, the MACD line. The Marlin oscillator, after a short-term consolidation at the zero neutral level, is now heading upwards. With this technical picture, the bulls have the advantage in the short-term trend. That's all for today. See you online soon. Good luck.